Hello, everyone. Welcome back to another update of the RobinHood app experience and with my experimental portfolio and trying to see if I can make some money off with starting a portfolio with nothing. So, a lot of people have been asking me about my opinion on the app and how it's been going. Before I get into that, I just would like to say I the four pillars of retirement investing is based off of a suggestion by John. Sorry if I pronounced your last name wrong, Munga. He actually came up with a great point with and he's also going to start his own channel about his progression with his Acorn app. So stay posted with him because I think as much we as our age group should start. Not, you don't have to post everything about it, but share what your experiences are, because millennials and generations younger aren't investing and they're not saving for the future and they're not progressing forward. And what I want to show is, with my experience with this Robinhood app, is a lot of people say I don't have enough money. I'm not making enough. I don't have enough. So I want to show that $20, $30 a week can get you there. So a brief little update on it. My experiences with it are great. Execution's not that great, but you just have to revamp your strategy. So instead of getting pinpoint trade, I gotta make trades on positions that are highly undervalued. So it doesn't matter what price I get into it, because it's always going to be higher than when I sell. So, and that's how I kind of day trade. Like, I've kind of picked stocks that I know were just been beaten the hell. Like, I picked Zanga, which keeps getting beat to hell, but then I bought at like 274, rose to 309, and sold. Or not 309, I think it was like 305. But I sold. And when you buy 6 stocks like that, it's Thursday, it's a couple bucks. And you're doing that all day, you get a couple bucks here, a couple bucks here, as well as your main long term holds are making a few bucks a day as well. So that's where a lot of my quick progressions are coming from. I'm picking right stocks for the right amount of money I have to spend. So right now for the month, halfway through the month, I'm at, let me give you an exact quote here. I'm at 17.6% increase. So it's a substantial increase. I made 20% of my value of my portfolio in 2.5 weeks. That's a lot. I mean, whether it's $500 or it's $500,000, 17.5% is extremely good. I mean, I'm right up there to some of the top ranking hedge funds, and I'm still growing, considering average hedge fund now is making 10-12% regularly. Right now I'm at 17.5% halfway through the month, and if my trades progress right, I may actually have 100% gain if I get lucky. But realistically, I'm probably going to end up with 25, maybe 30% if I keep pinpointing the right trades. And so you got to get lucky at some point. Like, you got to be at the right time, right position. Some reason decided, I'm going to look up this company and see what's going on. So, I mean, there is a large amount of luck in there. And don't get me wrong, I do lose. Like, I lost some Sprint because I thought, okay, well, the Radio Shack merger would give them twice as many corporate stores and maybe that would help. Alas, it did not. I probably lost $7 or $8 on those trades. The reason why I keep making gains is because I don't have an emotional attachment. I will lose. The inevitability of losing is a factor. I'm probably going to lose 60% of the time. You can't focus just on the losses. You got to focus on clearing it out, like wipe that memory clean and move on to the next trade. Because if you stay too focused on those trades, on the negative trades, you're going to fall into this ball of confusion and desperation, and you're just going to be trying to get bigger gains out of riskier stocks, and you're going to eventually lose all your money. So you just got to say, hey, I lost only 1% of my portfolio. Stop, exit, find something that will push you forward. Don't find something that's going to cover and gain. Just find something that you know you're going to make money off of. That's all. The end of the game is make money. It's not, oh, I lost $50, so next trade I got to make $100. No, I lost $50, so maybe the next trade I'll make $1, but I just got to make steady progression. That's it. So that's kind of like how I pick my stocks, and that's how I'm maintaining these high increases. Is I do lose, but I don't lose as much. So and I cushion myself. So because I know my long puts, when I know the market's gonna pull back and start selling off, I sell off all my shorts. Everything that's I'm in that position just to see if I can make a few cents and go. No, they all get sold. So then that leaves me with my main my main four really, which is Ford, Bank of America, CFG, and FIT. FIT now is in my main. It was back and forth. I was selling, buying low, sell high, buy low, sell high on it. I was making tons of money on it, but now it seems like it's in a steady progression north. So, yay, FIT. So, right now my position on FIT's about 20% of my portfolio, 20% of my long-term holds. So, and I have about a couple $100 now I can play with on day trading, which is helping a lot. Because now when I know a stock is good, I can buy a lot more of it and make a lot more money. And that's what I'm seeing now, and it's proven true. It takes money to make money. The more money you put in, the more money you get back. But you're not making any different percentages. That's the thing. Like my percentage gain is still going to be 17.5%. But if I can get a 17.5% off of $1 million, then guess what? I made $170,000 in half a month. That's great, right? That's really great. But most of us aren't trading on that level because why? You have the emotional attachment. I know I'm getting a little off track with my update on this, but I really want to talk about your emotional attachment to your money. Yes, it's hard because you worked hard for it. You get up, you go to work, you deal with whatever it is going on at work, then you got bills to pay at home, you got to deal with whatever's going on in your home life with some family members, good or bad. And when you invest your money, you're like, I don't want to lose it, but I want to make money, but you're emotionally attached to it. When I trade, I'm not emotionally attached to it. I work hard for my money, and I want my money to work hard for me, but when I lose it, I don't get affected. When I gain, I don't get affected. I just stay focused on my path. I follow the process. I have respect for the process. And that's what I think a lot of people who jump into investing, they don't have respect or knowledge of the process. The process is just to make gains and keep track. Just focus on the next trade. Focus on the next trade. Don't focus on the loss. Don't focus on the win because you get the same hype. When you focus too much on the loss, you get into this negative ball and you just start rolling downhill. When you focus too much on your winnings, you get too overconfident and thinking that everything you do is going to be right when no. You have to realize that 60% of your trades will be wrong over the course of your lifetime. 60% of your deals are going to be bad. It's just a fact of life. And every now and then you get thrown a bone that's like, oh my God, this is the luckiest thing ever. And you just got to say, hey, that it came, it's a blessing, it came in, I made money, push it aside. Let me just focus on the process. Give respect to the process. Just do your research, analyze, remember, track, invest. That's how your process works. Look at the company, analyze it. What were their earnings? Not last year, not for the year, not for 2 years, but look at them for the last 10 years. Where is this company going? How many CEOs has it had? How many losses have they had? Did they beat their quarterly earnings? Although not whether they beat it or not, their projection earnings doesn't matter. I mean, it matters, but it doesn't matter. It matters when you want to double down on some day trading. That matters, but a business can't grow like that forever, and it's just unrealistic from when these analysts say are pretty much doubling down on these gains. What matters is, did they make money like they did last year, and are they making more every year for a consistent decade? Now, a fad is a year. A trend is 3 years. But a progression is 10 or more years. Like, if this company's just been making money hand over fist for 10 years, then guess what? It's time to invest in that business. Because why would you invest in someone that's just saying, oh, we got lucky, it rained over here, so now we got some water? No, I'm going to invest in the guy that has a whole ocean worth of fresh water, so we don't ever have to worry about it going out. That's how how you got to think about business. I'm going to invest in this business over here because it has a lot of money, and I would like that money. And they give higher dividends, and they're going to be around because they have a good company culture, structure, and they understand their position in the market and where they're going. So it's kind of like I don't want people to invest in fly by night businesses. Like they're here and they're gone, and people got to realize like 99% of businesses fail. By the third generation, you'll be lucky if you have one business from that original generation still in business. Like not many businesses become Procter and Gamble. And then you say a lot of young businesses are saying we're going to be the Procter and Gamble of the tech world. No, Procter and Gamble became Procter and Gamble over 180 years, and for 50 of those years they sold soap. That's it. So you see how long it takes to become a Procter and Gamble. Not going to happen overnight. And it's like you just can't fall for those market switches. And it's just like right now, nobody's investing in regional banks. Just a couple days ago, CNBC posted saying regional banks are making tremendous sums of money, and they're more profitable than large banks. So why would you not want to invest in a regional bank? Granted, I think this whole internet craze with banking is going too far. Like Ally Bank, we have no branches, so we can give you more earnings and stuff like that. Well, their stock hasn't budged and their earnings haven't budged and their balance statements don't look, they frankly, they look like shit. You have CFG, who's been in business for 150 years. You know, if they disappear, it's because a bigger bank gobbled them up. That's it. They're not going anywhere. And they understand the concept of the branch. Help and build. That's why they're working off their names. Citizens Financial. It's like they're helping their customers. They're helping clients. They're helping people. And they understand the point of the business. They're not trying to cut. They're just trying to get deposits, get good loans, make more money, and pay dividends. That's all they're focused on. And they've been doing it good for a long time. So that's kind of like my insight on trading. And I see it all the time. People just get burnt out. But anyway, off my tangent, back onto my true update. Like, as far as, a couple people give me some questions about how do I like the app, how do I like Robinhood, and I want people to know that this is an experiment of mine. This isn't my primary trading platform. I use Ameritrade and Scottrade. Now, I don't trade heavily on Scottrade, but I do trade heavily on Ameritrade, or TD Ameritrade. The reason why I'm with Ameritrade is because I've been with Ameritrade since I was 18. Since my parents set up my account for me and allowed me to do trades, and I took it over when I could. No, I've had that account for years and just been growing it ever since and using it to pay off debts and live my life off of it, which is pretty good because it puts me in a position where I don't have to work. I just work because I really don't have anything else to do but to go work, and it's always good to go do something else and get out of the house, right? But I use those two as my primary brokerage accounts. And if I could, I'd get a more direct line. But as far as the Robinhood app for what I'm trying to do, it's perfect. Because I've saved, over the last quarter, I've saved a total of $168 in trade fees. Like, excuse me, if I was at Scottrade or E-Trade, I saved $168. Now, you don't think that's a lot of money. Like, on my main portfolio, that's not a lot of money. That's like a 0.00005%. Like, that's so far down there, it's dismissible. But when you're just starting out and you only got a few $100s in there, would you really want to spend 50% of your portfolio on trades and management fees? No, you get none of that. You just keep all your stuff and you just keep rolling it out. They collect the interest off your idle money. That's the only thing you miss out on. You don't make interest off your idle cash, which is fine. Because it's moving too fast in my account anyway to really sit there, because it's like it's in and it's gone. It's like they get a day of interest. Whatever. I don't care. about that. That's that to me not making interest on it. Now I have heard rumors and talking to just sending suggestions to their support that marginal buying is a possibility that may happen. I don't know. I'm not trying to put words in RobinHood Financial Services. I'm really not, but I heard about it, and it'd be kind of interesting to see because you're given this experienced trader tool to a lot of inexperienced traders, and it's going to be interesting to see how the market handles that. Because even though people think this market's like this huge, massive engine, and it's really not. I mean, there's a lot of money in there, but there's nowhere near the amount of people who are actually investing. Most people don't have 401ks or personal trading platforms. So it's just kind of interesting to see how that will progress. As far as limit buying, some people have said about limit buying to get accurate positions. And I'm not discounting limit buying. Limit buying is great if you're not a full-time trader because you can go to work, set your limit, and if it falls below that limit, you sell and save and reduce your risk. If it reaches the point you want to sell, that you're comfortable with selling and cashing out your equity earnings, then it will sell. That way you don't have to pay attention to it. And it's a great tool for experienced traders because you can be so focused on day trading, but you just want to make sure this stock is covered. So if it ever hits here, sell. If it hits down here, sell. So you're covered. So you don't have to look back at that stock. And usually you set these up on longer holds that you would normally do. As when you're day trading, limit sells are not really that good. You're just trying to sell now. And I think people trying to sell at a specific price lose out. How I do it is I look at where the company is, I ascertain what I think their total net value of the company would be, and I say, well, I don't think $10 a share is really good. I think it's really a low price, and I think it's a great buy. So I'm going to buy into it, and it goes up $13. Now, a limit hold, you place a limit on 12, you would have sold out, and you would have had to get back in. The day trader is just going to constantly watch it, and as soon as you start to see the tide of the price turn and it's going to start rolling out, that's when you sell because you've reached the top point, so you sell. And that's the advantage. That's kind of like the disadvantage and advantage of limit buying. My overall personal experience of the RobinHood app. Before I do that, a lot of people said they're having trouble with getting approved. That I don't know. I honestly would just contact their customer service because I applied and I got approved instantly. From what I hear from other people, it takes an active checking account without any bounce checks, or it can't be like a too new of an account or something like that. So it has to be an active account. And that's fine. It just has to be an active account, and there's nothing you can do. Or you just write them a letter and have them fix it for you. Saying too much. My experience on this app has been really good so far. I mean, I've saved a lot of money and I've made a lot of money. So the cost of me having interest is irrelevant. I mean, I read a review on it saying no one would ever really do this app. They would do it to get into it and then move over. Well, let me tell you something. If you don't have to pay for trades, and doesn't seem like a lot. Like if you do one trade a month, it doesn't matter where you go. You're only spending $7 minimum for it. So, but if you do like I do like 5 or 6 trades a week, and probably when I have more money, I'm gonna do probably like maybe 20 or 30 trades a week, and then all of a sudden when I got tons of money, I'm doing hundreds of trades. So maybe the Robinhood app would actually save me a considerable amount of money. I mean, I can tell you right now, on this experimental account, I saved $168 last quarter. That's almost my earnings for that quarter were $190. So you almost took up my entire earnings, and that's what gives people the perception of, I'm not making any money in the stock market. Yeah, because you're paying all your stuff to fees. In order for you to make money, steady incremental growth, you just can't have fees. So and before the Robinhood app and all these other cheap brokerage, online brokers, it used to be if you wanted to get more, pay less in fees, you went into a hedge fund. Because I mean, when I worked at Bank of America, it was insane. There was 13.5% commission on annuities, like 8% on trades, all this. There's like, I mean, there's just like there's a huge sheet of all these commissions that you get paid, and it's ridiculous. And it's like you're paying that money out of your pocket. You're basically saying, here, buy this stock for me, and here's it's like saying, here, buy this stock for $100, and here's $50 out of my pocket. Don't do that. If you're going to be experiment with some trades, experiment with the Robinhood app, because at least you're not wasting money on trades and wasting money on bad trades and wasting your money on someone else trading it. So, with that said, I like the Robinhood app. I do wish there was better notifications, like, did you get your dividend payment today? When specifically did you get your dividend payment? So you can easily track it. When because you do get email notifications when your trade is executed. And could I get an app notification right away, or what price exactly was the execution done for? That'd be great too. But it's a relatively new app. I think it's only been around for a year and a half, 2 years, and it's just finally opening up to the masses. So give it time. All the changes and stuff, they're going to be working through it. I do wish it wouldn't crash as much, but hey, that's part of the aspect of a growing business. So any trade platform can crash. I mean, a week ago, the Bloomberg system crashed. The Bloomberg terminals crashed in the market. Like, these aren't terminals that most people have in their homes. These are the terminals that people are trading with on the stock floor. Crashed. So it's technology. It can happen to anyone. With that said, I want to tell people, keep in mind, do your smart trades, do your research, and respect the process. I wish the best to everyone. Comment, like, visit my Facebook page, send a like. There, open forum, complete open forum. Hate or like, feel free to leave your feedback, because you're only going to help someone else. So even if it is just some you don't like the process of investing, share it, because someone else may be sketchy and may not like it, but are doing it because someone else does it. And when they see a comment saying, hey, I don't like it, then you might help someone. I don't know. It depends on you. I personally say you should always invest, because not investing your money and not having it work this hard for you is like saying, here, let's just take my money, half my paycheck, and burn it. That's how I feel. So I feel everyone should invest, and everyone deserves a right of equal information and equal knowledge about trading. So with that said, good luck to you guys. Good night. I know I posted this video late. I meant to do it yesterday, but it's going up now. So like, subscribe, follow me on Twitter. Someone also commented, I will be working on the website and getting a trade ticker so you guys can see how my trades are going and what I'm trading and how fast I'm trading it. I'm going to look into it and see if it's something I can do. With that, thanks guys. Thanks for the support. Like and subscribe, and leave your feedback so we can help each other and get better. So long. See you Monday on my next update.